So I'll wait for that. Let's go across to Deepak Shinoy as well, who now joins in, founder of CapitalMind.in. Deepak. Okay. This is a really good number, $10.6 per barrel. Now $10.6 compares to $10.4 per barrel. It's actually gone up in a quarter in which the Singapore GRM has fallen from $8 to $6.2 per barrel. The Reliance's GRM has gone up to $10.6 per barrel, which really is the standout performance at this point in time. Deepak Shinoy is also with us. Deepak, where is this $10.6 number coming from, you think, in an environment where the Singapore GRM was down so much and there were concerns that the last quarter performance was maybe peak performance for Reliance?
Yeah, in fact, I'm surprised. In fact, it kind of lifts my hope for a number of other petrochem players as well. Reliance is, I think, 10.6 is one of the highest numbers I can see in the last maybe. In fact, it's the highest number in the last, I think, 14 quarters as far as I have numbers for. So it's a pretty strong number, and you're talking dollars per barrel. In rupees, it's obviously even higher. So I think I haven't been able to go through all the numbers in detail. We haven't seen that, but I like the 10.6. I don't know where it's coming from, but obviously they've done a lot of operational efficiencies here.
You have any guesses, Prayesh, where it is coming from? 10.6 is seriously better than what any global player is able to produce.
Even I'll have to go through the complete press release, and we'll have to hear it from the management as to how they are able to consistently beat. And this is a big beat, this is like a $4 kind of a beat to the Singapore GRM, which is a big beat. And I think this is the highest spread to Singapore GRM since 2009, early 2009. So that's a pretty big spread that they are earning. So that will have to be seen as to where they are pulling it from.
Okay, I have one statement from Mukesh Ambani saying that they've achieved record levels of profit, and they're talking about a better product mix and lower energy costs. So that's the reason that you have seen this kind of performance from Reliance. You were saying something, Lata?
No, Mayuresh Joshi, I think, has joined us. I was just going to ask Mayuresh what he made of the numbers and the gross refining margins. Mayuresh?
Evening, Lata. I think clear beat, Lata. I think exceptional set of numbers both on the refining and the petchem side. Specifically on the GRMs, I think as Prayesh was mentioning, a $4.3 beat because Singapore GRM is hovering close to that $6.3 mark. 10.6 is an exceptional number. So again, clearly one really needs to understand, because gasoline cracks were down, naphtha cracks were down, the LPG end product prices were actually down. So one really needs to understand from management commentary where the GRM beat is come from. And even on the petchem side, I think at least our numbers suggested much lower numbers on the EBIT front. So even that has been a beat in terms of how the operational performance has gone through. So I think, in my opinion, a great set of operational numbers by RL.
Okay. Would it change your view on the stock price, Prayesh?
See, we have Reliance as a top pick in the oil and gas space, and we would continue to maintain that. It's just that if these are sustainable gains, then possibly we'll have to revise our estimates upwards for this year. And with the off-gas cracker and the petco gasification projects coming in, the benefit should only improve. So in that sense, possibly an upside to future estimates as well. So that will be revised post the management commentary.
Okay. Likewise to you, Deepak, what are your price targets for the stock? Would you now reconsider after this extraordinary margin performance?
No, actually, Lata, I'm more. I think refining is going to be a one-off. We probably. I want to see if there's some kind of an issue with respect to.
Okay, we'll get back to Deepak in a minute. Mayuresh is also with us. Mayuresh, your stock price targets, will they require revision?
Clearly need to hear from the management whether the sustainability is there, because even in the last quarter, Lata, we are speaking with the 10.4 was sustainable. They've actually beaten that this quarter around, and it really assumes Singapore GRMs to stay in that range of 6.5 to 7.5. Assumably, I think Reliance trades at a premium of anywhere between $2.1 to $2.3 per barrel. So Reliance GRM should ideally pan out anywhere between 8.5 to 9.5. Having said that, I think the target price of 1,050 still stays intact. I think we might revise numbers once we hear the management commentary in greater detail.
Okay, $10.6 is a 7-year high in terms of GRM. It was because of product mix flexibility, robust risk management, and that's what at least the management is indicating. So Prayesh, Monday morning, do we have a gap up on Reliance?
Yeah, definitely. I think so, because these numbers are better than any of the estimates on the street. So I think so, definitely a gap up opening, and even at these levels, I think the Reliance is a good long-term buy, given that their core earnings can actually double from the refining and petchem segment. So it's a good long-term value play, and I think so. The only risk is the telecom business, where I think so it should take some time for them to break even on the EBITDA level. So that will be just a drag, but I think over the long term, even that should be value accretive. Retail is doing well. There are some risk on the shale side of the business and the domestic E&P, but they seem to be very minuscule in terms of contribution to the revenues and the bottom line. In that sense, those business will not matter much. Overall, I think that we will remain bullish on Reliance from a medium perspective.
Okay.
Just to read out the statement from the chairman on refining the margin in the refining business itself, to reiterate what you said. Refining business performance was notable as it benefited from a combination of high utilization levels, advantageous crude market opportunities, and strong global fuels demand. Petrochemical segment performance reflects, of course, strong volume growth, product mix. But on refining, basically, it's I think opportunistic use of the crude market prices, as well as high utilization levels that they are attributing to. On Reliance Retail, the statement is that it has achieved a milestone of 5,000 crores quarterly turnover mark for the first time. That's it on retail, actually. Is there anything else that stands out in the media release?
No, the throughput and the crude refined, Lata, has gone up quarter on quarter from 16.6 MMT to 17.1 MMT, and that combined with the fact that the gross refining margin has also gone up. Look, let's explain to our viewers why these numbers are a beat on estimate, and why we're talking about this number the way we are talking. The expectation was that the gross refining margin for Reliance would fall to $9 to $9.5 per barrel. In fact, the weakest estimates were even $8.3 to $8.4 per barrel, but we sort of chose to go for $9 to $9.5 because that's what Reliance has done in the past. They have made the habit of beating the Singapore GRM, but nobody was expecting the GRMs to go up. So the margin has gone up quarter on quarter, and your production has gone up quarter on quarter. So obviously the dual impact means that the refining EBIT has gone up significantly quarter on quarter, whereas you were expecting a drop of 6% quarter on quarter. Instead of a 6% drop, you've actually seen inching up of refining EBIT, and that's the reason that these numbers are beating the street. There's no other positive surprise in any other numbers. Petchem is as per market expectations. Oil and gas is actually the worst quarter that Reliance has seen, but that also was on expected lines. So it's a story about gross refining margin, and again you have to keep it in mind that this is a number which is tough to sustain. They've done it for last 2 quarters, good for them, but can they sustain it? That really would be the key question. Last time also the GRM was significantly higher, but the stock actually made a high immediately after opening. This time around, it will be interesting if the stock now has a room to go towards its previous highs of 1050. But will the market again believe that it was a bit of a one-off? Are they in a good groove right now, which may not last for too long?
50% higher than the global average or the global competition is saying a lot. You can extract a little more than the global competition. You can extract 20%, 25%, but to extract 50% more than the global average or the market average is a tall ask, and that has been delivered. Mayuresh, what's your sense? Would the stock peak after a gap up opening on Monday?
Clearly, Lata, I think if you look at their core capex of $17 billion odd, $12 billion already spent, and the kind of projects that are coming through, the off-gas cracker probably has got delayed by 6 months, so you're probably looking at the second half of FY17 for the benefits to start accruing on that front. But the petco gasification expected to come through in the 4th quarter of FY16. You're already looking at polyester expansion happening in phases. So you have the PTA and the resin plant that is actually up, and again phases wise over the next 2 quarters, the commissioning will start happening through on that front as well. well. So specifically on the GRM front and the refining business, yes, I think it might be difficult to maintain that, but Reliance has always posted premiums to Singapore GRMs. As I was mentioning, I think we are expecting at least for the next 2 years GRMs to range for Reliance specifically between that $9 and $10 mark. Having said that, I think on the petchem side of things, I think you're looking at the polymer chain actually doing well over the next couple of years. The polyester chain more or less dependent on how the integrated prices might move up, how Chinese demand might actually pan out. But again, I think if you take a mix on that front as well, the petchem margins should more or less hold up for Reliance. The E&P part, again, I think largely discounted. So I think the kind of losses as one was really expecting, the kind of production numbers of 11.5 MMSMD that one really talks about is getting continued as per analyst expectations over the next couple of years, unless some major changes happen in terms of pricing for deep water discoveries and what really happens with their arbitration side. The shale, as Prayesh was mentioning, yes, it's been a drag with the prices coming down. You're probably looking at some profitably hit happening on the EBIT front on the shale business, but retail has stabilized on the petrochemical or in the petroleum business on the retail front there as well on the marketing side. A lot more stores getting opened. So I think a stable set of numbers, the stock might not peak off, and again I think clearly we are maintaining an optimistic stance over the next couple of years.
Okay, so Deepak, the big question then, come Monday morning, can Reliance take the leadership position and take the market higher? Do you get a sense that we're going to see that? This was a question we asked last quarter as well, but last quarter clearly the market itself turned around. But do you think Reliance can take over that leadership mantle now?
Anuj, I think Reliance, actually the stock doesn't seem to do well when they have good results. So, in that context, I don't see that stock. I think people are a little tired of it. So 1,000, 1,050 would still, according to me, be just about the same high we saw like 7 years ago. So at this point, it's even less. In fact, the real high was about 1,500 if I remember right. So in that context, unless it actually breaks out of that zone, I don't see this as a tremendous bullish story. But I could be surprised. I think the stock's not going to react too much on Monday.
Okay, the stock is not going to react too much on Monday. Mayuresh, is that the sense you also get? Because last quarter was also a record quarter, and we saw the stock actually peaking out after that.
So clearly, Anuj, as I mentioned earlier, I think again there will be some question marks raised on the sustainability of GRMs, or even if, as I mentioned earlier, if one really assumes the lower end of the band for the next 2 years at even $9 a barrel, and you do your estimates around that, I think the stock can give meaningful returns because many projects will start getting commissioned over the next few quarters. And though the off-gas cracker has got delayed, my opinion again lies that with the petcoke gasification coming through, I think the GRMs will get some amount of stability based on that project itself. So clearly I think the stock will react positively, but then again question marks raised on all these fronts. But clearly I think one really has to have a long-term view on a stock like Reliance, because earnings will start coming through from FY17, and once they start coming through, I think the stock will react positively based on those numbers.
Okay. Prayesh, final question to you then. Do you see the stock making a move towards 1,050, the previous highs, or do you think the stock struggles after maybe a bit of a pop-up on Monday morning?
No, I think the stock should see a sustained uptrend now, and unless there are some jitters coming in from the E&P side of the business, which we believe are just sentimental more than any major impact on the earnings perspective. So we would continue to maintain the Reliance as a top pick in the oil and gas space.
All right. Prayesh, Deepak and Mayuresh, thank you very much for joining us in this special coverage of the Reliance Industries numbers. Anuj, you want to sum up?
Yeah, I want to sum up, Lata, and I say that with as much responsibility as I can. And of course, that applies because we have the standard disclaimer that Reliance owns both TV18 and Network 18.